If you've been following me long enough, you'll know that I am an active investor in the markets, and you'll also know my investment strategy, which is a core satellite approach. Now, for those of you who don't know what a core satellite approach is, it's effectively where I personally will put most of my money, the core of my money, the largest amount of my money in low cost index funds in ETFs. That holds the majority of my investment. And then around that, in satellites, if you will, I'll have portfolios of individual stocks in individual companies that I have an interest in. So, for example, Tesla being one of them. And I want to make this video today because I have a portfolio with eToro, which has some individual stocks in it, which for the past 18 months has been down. And I have to be honest with you, even though I am a relatively experienced investor, I battle with myself around whether or not I should cash this thing in, whether I should cut my losses, whether I should just hold. And I've held until now. And thankfully, it is now up. It's in the positive by the tune of about £740, roughly. And it's only up because of the Donald Trump win in the US election last week. And with this, I think there are points, lessons that I definitely have in my mind right now that I want to share, particularly for first-time investors who may have invested this way in 2021, 2022, who are looking at their portfolio and it's just driving them nuts, because trust me, it's driven me nuts. I've got to be honest, straight off the bat, this eToro portfolio, I did in a very, very kind of like quick way. I wanted to buy more Tesla. I didn't want to pay the trading fee in Hargreaves Lansdown where I have other Tesla stocks. I knew that I could do it in eToro relatively quickly without paying that fee. And then I've added to it as we go. So in here, we've got Tesla, we've got Bitcoin, we've got SQM, and we've also got the basic attention token as well, because I was using their browser for some time in 2022, 2023. Straight off the bat, not very diversified, because with 4 individual stocks, where's the diversification really? I mean, I've got tech in there, then I've got 2 crypto, and then I've got one company which is in the mining space in SQM, who basically mines lithium for batteries for electric cars. It's not really diversified as much as I would normally want to. But like I said, I did this in a rush, just hobbled things together. And I think that in itself is a mistake that a lot of first-time investors fall into when they're told on YouTube channels, just build a individual portfolio, an individual stock portfolio, because hey, you can just research this company, go look at what their share price is and what their dividends payout is if they're paying dividends, and boom, there you go, hey presto. They don't get told that there is so much more work that goes into it, like comparing the company that you want to buy with its competitors, trying to figure out what the competitive advantage that company that you're interested in has over their competitors. There is so much that goes into it around reading accounts and trying to get a real picture, a real feel for what's going on in the business, because you can see that in the company accounts if you know how to read them well enough. So straight off the bat, I can definitely say I've made some mistakes doing this, right? But this is for a portion of my money that really I'm okay to lose in theory. But this is where the biggest thing comes in that I want to talk about, in the fact that as an investor, one of the biggest things you're going to have to deal with is your own internal monologue and your own internal psychology. It's very easy to say that we're accepting of if a portfolio is down. But if a portfolio is down £3,000, it is very, very different when you see that number on paper and every fiber of your being is just like, cash it in. Being able to deal with that, being able to balance that in itself is an art and something that we have to develop and learn over time. And yes, at the moment I've held, but I now have to start asking myself the question of, okay, well, I've got these individual stocks. Yeah, Tesla's been a bit problematic recently. I've still got Bitcoin, yes. I don't know what I'm going to do with this just yet. Do I hold? Do I not? And this is the other thing that is worthwhile bearing in mind, because in these moments where you're looking at your portfolio, and let's just say you did hold and you have recovered like I have right here, right? So I'm looking at my Tesla being in the positive now for the first time in 18 months. In my head, I'm thinking, okay, I can just cash it in now, and I'm still invested in Tesla anyway via my other investments in my core strategy, and I've still got my other Tesla in holdings in Hargreaves Lansdown, which has done significantly worse. So I've held that for a very long time. I could cash this in. Also, I have something on my shoulder saying, well, actually, Pete, what if the share price goes up by $150, if you cash it in now, you've missed out on all that growth. And I think, again, that is something else that as investors, we have to try and balance and deal with, because we are oftentimes chasing the gain and oftentimes mitigating the risk of a downside in that moment when you're in gain. And it's exactly the opposite when you're in the loss. In the loss, you're kicking yourself thinking, maybe I shouldn't have put this much into it, hoping for the gain, but the loss weighs heavy. And so the psychology of this is very, 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 very important. And I think if I could boil this down to 2 lessons, it will be this. Look, if you're a first-time investor just starting out, or you're a novice just starting out, I think it's really important not to overcomplicate how you begin, because if you start wrong, it's going to dent your confidence as you try to build further into the future and actually create wealth. And I think starting off with low-cost ETFs, low-cost investing is absolutely crucial, because it will allow you to, number one, be diversified, and number two, take away some of the headache that you might feel in a portfolio where you picked individual stocks, but you're exposed to the extent of volatility that comes with that type of investing. And I've been doing this long enough now to know that oftentimes when we talk about investing and low-cost investing specifically, people are like, well, how do you actually do it? And so on the 1st of December, I'm actually going to be running a workshop, a masterclass, if you will, with Invest Engine. And it's designed to basically take you through how you open an account, how the platform works, how to actually set yourself up so that you can do that without doubting yourself, or you can do that knowing that you're in safe hands doing so. Now, Invest Engine are a low-cost ETF platform specifically. And if you're interested in things like the S&P 500, for example, yes, you can go and get it at Vanguard at 0.07%. You can do the same on Invest Engine, but the big difference is that Vanguard charge a platform fee, which means that if you get your S&P 500 ETF with Invest Engine, you actually pay less for the ETF and it costs you less than if you did it directly with Vanguard. It's one of the reasons why they've done so well over the past 2 years with acquiring new customers. Now, the ticket price is $9.99. I don't know what you get for $9.99 now. I think you probably get, a coffee or a croissant, and you might get some change. But we're going to spend 2 hours walking you through the Invest Engine platform. It's going to be a very, very worthwhile investment. I'll leave a link to the full agenda. Go check it out and maybe book yourself a ticket. You'll also get the recording and some other bits and pieces which we'll give you as well after the workshop. There'll be plenty of time for Q&A, but I'll leave a link in the description down below for you to check out. The second thing, and I want to end on this, and that is that if you do want to continue investing this way, and that's completely fine if you want to, please be aware of the volatility that comes with investing in this way. Like I said, I am relatively experienced, but when I reviewed that portfolio and I see that it's down, and it's down consistently for 18 months, and that's because Tesla's had a really, really volatile time, as has Bitcoin. You have to be able to deal with what that feels like as an investor, and particularly as a new investor. It's very easy for us to say on paper, it's okay if it goes down, but how you react when it actually happens and you're looking at it being in the red is very, very different. It takes experience. It takes time to be able to deal with that monkey in your back, if you will. And so really pay attention to that. And, alongside that, please pay attention to the basics before you begin investing as well. And I talk about this on the channel. It's often deemed as quite boring, but it's important to make sure that you're not living paycheck to paycheck. You have some disposable income. Hopefully, before you invest, you've paid off all your debts. So you don't have like £200 that has to go on debts that you have to service, adding that additional pressure. And making sure that if you can, you've got an emergency fund of 3-6 months so that you can really invest and build wealth into the future without the financial pressure that, oh my God, if I lose my job, I might have to cash in my investment and it might be down. These are fundamental things that are very, very important, to try and pay attention to those. But look, let me know what you think of this in the comment section down below. I've shared a little bit of how I felt, and, I had to check myself sometimes. And as long as I've been investing for, it's something that I have to proactively do. And maybe I get better as I continue to invest, but this is human psychology that we're dealing with here. And this is just the way we naturally act as human beings, fight or fly. I'm going to finish off this game of pool. Catch you in a bit.